All right, welcome back to another episode of Capital Finesse. This week we're gonna talk about several interesting topics that I gathered. But first and foremost, I'm gonna briefly talk about inflation data that came out last week, and market reacted, and lots of rebalancing and rotation happened on the overall market from a bigger cap to smaller cap, and that was very interesting to note. And the core inflation rate came out 0.1% month-to-month basis. Shelter costs end up coming at 0.2% on the year, 5.2%, and food 2.2% over the last. Actually, food increased by 2.2% over the last 12 months, with food away from home rising by 4.1%. And energy costs, energy increased 4.3%. Electricity price up 4.4%, and natural gas by 3.7%. So these data came out. Interesting to note that how these are really related. I think several areas that needs to be considered, mainly like insurance costs, shelter costs. All these needs to be considered in order to be kind of positive towards the inflation coming down. That's kind of what happened with the data. Still a lot of uncertainty and unclear what would happen with Fed, if they will really cut rates or by end of this year, or we're gonna stick to not with this interest rate. We're gonna stick to this interest rate and see what's happened after the election. So the main thing was that the CPI data came and the rotation happened. Lots of move into smaller cap area. As you can see, this area. July 11th, the data came out, and we had this massive sell-off and move, kind of a correlation with IWM into the smaller cap, kind of more volatile and increasing the volume on the other side. Although still market it's very bullish, but I don't see much of positive things out of it for at least a short term. This is purely because of the election, in my opinion, and obviously we know the Seven Magnificent performance, and it really directly affecting the overall market return. So yeah, that was very interesting, because a lot of people think that inflation going down, people tend to react positively, and this is not the case. So as you can see, this time it was kind of sell the news happen. People tend to not understand how this sell the news really works. Understanding where the money can go, it's also crucial. So that creates an opportunity and potentially will be beneficial for those that take advantage of it. That was a CPI data news, and also I think on that day we had Tesla news, which was also another selling pressure on the tech. I think they came out with the update on robotaxi. They're going to postpone it. I believe maybe October. It was supposed to be in October, or I think they postponed it for another time, and I don't know if they announced it or not. I'm not quite sure on that, but yeah, that was another headline that really affects this move to continue going down. So yeah, that was very important to talk about, or where are we with the inflation. On the other side, we had this short seller news that they basically gain in health and industrial sectors. Basically, that offset their tech losses, and they gain over 10 billion in profit, which was worth noting. Relatively, people against short sellers, especially in this, I guess, in this era. We have short restrictions in some other region, but people tend to not really understand how beneficial it is to, having this option or ability to, make money towards the downside, and on the other side, being able to detect or find these companies that are not relatively doing good, their business model sucks, and they tend to just profit or make money off of your investment. And generally these companies are either fraudulent, or their managements are inexperienced, or they don't know anything about the business that they're running. So it's important to know that when you have that ability, you can kind of being on the other side and have this insurance. It's also shout out to Carson Block, the founder of Muddy Water, a short seller activism. He was actually having an interview with Bloomberg last week, and he was basically talking about this matter, that why the investors are investing into these funds, the short seller activism, because it really, those premium that they pay, it really an insurance towards their investment. So it's worth noting that. And politicians and most, I guess, unsophisticated or uneducated people think that short selling is a bad concept, but in reality it is not. It's more for being able to make money on the downside. And then the other side, we see that people who are always against short sellers, that they think they're not going to make money, but it is not true. You can kind of see all these data that are coming out and how successful they are. And this was one of the example in second quarter, despite the fact that the technology was up so much, and obviously short seller didn't perform in that area, but switching or taking advantage of the other sectors that are pretty much not performing or not doing well, and their downside potential is high probable. So why not just focusing on that and take advantage of those sectors. This is worth noting that the market overall really running on the Magnificent Seven. So this imbalance situation, it creates a bigger opportunity on a short time. I mean, there's 6 sectors that you can basically focus on and make money on the downside. So yeah, that was one of the topic that I wanted to kind of share and kind of talk about how really short sellers are performing. On the next one, I have Bill Hwang, the founder of Archegos, the family office that we, for those that they don't know anything much about what Bill Hwang does. He was a ex hedge fund manager, and he worked at I believe he was working at, he founded the Tiger Asia Management, which was under umbrella of Tiger Management. So that's kind of his background. But this article on Bloomberg, it was the best article. It kind of go through that, the last 72 hours of the collapse of Archegos, and talk about how it really went during the morning of that crisis, and it was a crisis for them, obviously. And it's very interesting because it shows all the tapes, all the screenshots from email exchange, and voice that recorded with all these banks that the founder, the CFO and the trader tried to contact and spoke with them. And this is all came out after I think he was in the trial, and last week or a few days ago, I think he got convicted on all counts, except one of the counts was I think one of the counts was on the market manipulation count. There's, I guess, different part that has pump and dump, but I think he didn't really he didn't convicted for dump. He got convicted for pump. So I don't know how that works. I think he didn't even convicted for the pump and dump market manipulation, because there wasn't any dump, basically. This kind of shows that how these family offices are heavily levered, and it's important to know that they have this power, have all these sources, but they're still not disclosing their position, or how much they're really actually managing or gaining, which is kind of create that uncertainty towards family offices more. And are they gonna change the law and make sure that every this risk associated with the family office, are they gonna really disclose more in the future? For this is really gonna affect family offices or not? So it's a question, no doubt. And I think after the result of this trial, we can kind of expect that something will change. And the story is interesting because he was such a firm believer to these stocks that he picked, and he was just piling up position on these. Piling up shares on these position without even selling them, even though it was a catastrophic event for them. And I think he was a religious person. He had this, I guess, religious idea. Not sure what went to the strategy part of it, but it definitely went out of hand, and really this wiped out, I think, 30 billion or something, just wiped out. And key stocks that they were holding, I think it was these Chinese stocks that with their portfolio. Also, you can see the screenshot in the article that kind of show how much they were holding that time, March 24, 2021. This is like the snapshot of their P&L, which is insane, and unreal how they really managed to. Obviously they didn't manage to they collapsed, but for such a long time, no one noticed. Not all of these banks noticed, and they eventually lost all these banks that were affiliated with them. They lost, I think, over 10 billion approximately, And and then this ripple effect really, I think, really affect the shareholders as well, and they also have the value of 100 billion loss. So these massive losses definitely affect the market, and they finally got caught. But what was the reason behind it, and how he was able to really do this? It was because he had this basically he leveraged the relationship that he had with major banks and these financial institutions. So he used this strategy to kind of make sure that these positions withhold. And I think he used swaps and contracts for difference to keep up with this. And one of the things that was also interesting, that he secured basically a large amount of borrowed capital from these major banks, these several banks all together simultaneously, and then he's just basically investing in these stocks. So it's a very interesting article. I highly suggest to read it. His background, how he kind of started all. I think he was part of a Tiger Asia management, and despite the fact that he got a settlement in 2012 with SEC about for insider trading. Hwang basically leveraged his established a network and reputation to kind of secure the substantial funding and credit lines. So this was also interesting. So I love this article so much that I definitely recommend to whoever that's interested in the field. So definitely read this. On the next topic, this article on Sequoia have this beautifully kind of ask this question about the gap between AI infrastructure investment and actual revenue, which is now reaching to the 600 billion. So worth noting to kind of how really they're going to make money and pay this amount. I mean, basically recoup this amount. How the GPU shortages have eased, and leading to stockpiles, and emphasizes OpenAI leading role in AI revenue despite limited consumer adoption. So that this is a good article to really dive deep into those questions, and it's kind of against this speculative investment, and like the past tech boom, and kind of highlighted the rapid depreciation of technology due to advancements like NVIDIA chip, what is it called? The B100 chip, which is going to be the game changer. So key points in this article is mostly about this gap, that AI can now really recoup this number, and the supply chain issue, which is already gone, but the investment, because the investment was so massive, and how it really enhanced on a fast pace, it kind of hard to get to the realistic number of the revenue when we have one leading, which is like OpenAI, for example. And so this kind of like projecting the 20, how it really kind of worked from 2023 and now we're in this kind of estimate hole of 600 billion, or it could be more. And this is a good article. Really go dive deep into that. And also on the other side, we have market very concentrated, very focused on especially S&P 500, very focused on these names and heavily invested. And I think in this chart that you can kind of see how it really shapes. And this is a great example of Magnificent Seven, that they are in this kind of merge situation with broader market. In this projection for the next year, the correlations get closer and closer, and the growth could be more balanced by next year, and more towards the downside possibly, because not a lot of leading indicator, not a lot of leading companies, not a lot of leading companies in the space. So we're expecting to see how it will plays out with more leading companies. Yeah, and then on the other side we have Microsoft and Apple departing from OpenAI. Apple has decided to not join OpenAI's board, which is a big step back. And Microsoft also now decided to really step down and avoid any regulatory issue, despite its significant investment in OpenAI. I think over 13 billion or something. So they're trying to really, this is all due to concern about potential conflict of interest and regulatory backlash towards OpenAI. So that's another part that worth noting. They're departing, and the future is still unclear. So yeah, the next thing I'm going to talk about PE war, private equity war. That what happened with two of the biggest acquisition deal. Which number one, I'm going to talk about the Robinhood. Robinhood acquire Pluto. Pluto AI, which is it's one of those interesting strategy that Robinhood use. I think they acquired a cryptocurrency exchange before for 200 million, and they're still enhancing. They're trying to be the leader in the financial industry by innovation, investing in innovative technology, and being kind of outstanding compared to other brokerage firms. So yeah, this is an AI investment research platform, which is pretty interesting. I have not been used it. I had never heard of it, but once I kind of saw the news, I found out about it, and I realized it must be something interesting and useful, not like the other AI product out there that mostly they're just integrated, and nothing really creative happening with their product. It's just purely design and look, but the functionality it's pretty similar using ChatGPT. You're better off using ChatGPT than using their platform. But there are good. I'm not saying that there are not. They're all garbage. There are good stuff out there, but as far as I notice, most of these, I guess, smaller businesses that kind of put AI in their category or business plan, they're definitely not. They don't have anything unique, So finding out or finding those that are unique is essential, and it's harder to kind of compare. But yeah, this one was investment research platform. I think I'm gonna add it to their platform and make it at the one shop place, sort of. There's not much details about how much they acquired this. I think we should expect that in their next 10Q on August 7th. See if they will put their acquisition costs in there based on how much they acquired this other exchange for 200 million. It was a crypto exchange they acquired. I'm assuming this could be somewhere ranging the same area, same number, or even less. So yeah, we'll see how it's that going to be. But other thing about Robinhood that it's kind of interesting to know, and this is their announcement. Obviously, they're gonna have their quarterly on August 7th, and they probably, I think they most likely talk about this acquisition more. Yeah, and I think one other thing that Robinhood is also superior right now compared to other brokerages, that 24 hours trading ability. So that option is out there. I think you can trade 24 hours, a few stocks and ETFs, not broader market. And I think Robinhood has it. Not sure if Interactive Broker has it or other brokers. This is one thing that they're trying to be ahead of the time, and it's important that how that 24 hours market, really will change the investment kind of perspective. And the next one, which is the biggest one out of all, Precoin. I'm not sure if I pronounce their name correctly, but they are a leading private market data provider for alternative investment, and BlackRock decided to acquire them for 3.2 billion in cash. So this marks the biggest acquisition of the year so far. They're integrating Precoin's data with their research tool that BlackRock has. It's called Aladdin platform, which is their own platform, and this will kind of gives them more, aims for more offer and comprehensive investment technology and data, basically. So combining these two would be massive for them, and Precoin actually expected to generate approximately 240 million in recurring revenue, which in just 2024. So that is a massive and big milestone for them. Great exit. That is showing how powerful your business can be, and then at the end of the day, you can take this beautiful exit and have a massive success. Lastly, I'm going to talk about Trump and the assassination news, biggest headline by far, and it's so unfortunate to see that how our country is divided, and we're not really united anymore. These kind of acts are not acceptable. This is also another article that kind of go over Trump with taxes and tariffs that I talked in the previous episode, and what he's gonna do with Jerome Powell, and who are the leaders gonna be for Treasury, or other roles that he has. If he became a president, he will fire them or replace them, or who knows. That's about the episode 2. I hope you like it. Please make sure to thumbs up, like this video, and subscribe so I can do more of this, or also do much more and do it better. So yeah, thanks for watching.